Hi, I'm Tom Nonamaker with Aramir Corporation. We've been trading a lot of SPX 0 DTE trades lately, and it's fine as far as the pattern day trader restrictions from FINRA if your account is 25,000 or more. But if it's a small account, then you really have to watch out for opening and closing positions. You're only limited to three day trades per 5 trading days. So with SPX expirations Monday through Friday, you can easily get hit as and labeled as a pattern day trader. And you can only make that change, I think, with thinkorswim once. You can re-elect to undo that, and they'll give you one more chance. But let's figure out a way to avoid that. So normally, if you're going to do, say, let's sell a put spread, something like this. Let's sell a vertical, and it looks like this on the risk profile. There's your bullish spread. And normally, if you'd want to close this, you would just create opposite, analyze opposite trade, and that would just close it out. So you're buying and selling the exact same things, but that would also trigger a pattern day trade event, which you don't want to do. So how can we get around that? Well, you can box off the trade. So if we have a trade at the 80.75, and let me just put this in as an order so we can see it. The market's closed. This is not going to get filled. And I'll do it in a different account. Okay, so we have this working order. Now, if we look at the option chain here, we see this working order. So we're selling the 80, buying the 75, which is a bullish spread as we saw. But now if we want to close it, we can do a box spread. And what's a box? It's basically you're going a vertical against a vertical, one bullish, one bearish. And the easy way to remember verticals is if you're going from the plus to the minus. So plus to minus is going up, so that's a bullish spread. So let's do the opposite. Let's go from plus to minus going this way with the call. So let's do a vertical here. I think we buy a vertical. Let's see. Let me analyze that. Let's see. Simulated trades, high positions. Okay. Oh, so we did a credit spread. So I got to do a credit spread on the way over here. So let's do this. Let's sell a vertical. All right. So let's see what these look like. So here's your original spread. And if we sell the opposite vertical, it flattens it out at 0. And that looks like it would just be basically this strike, we're going short on the calls, and this strike, we're going long. And we're selling a higher strike call, so that's a credit spread. So basically what you're doing is if you're entering a credit spread, you're closing with a credit spread on the other type of instrument. So if you're opening a put credit spread, you want to close with a call credit spread. If you open a put debit spread, you want to close with a call debit spread. So that's easy to remember. But let's figure out what prices we should set. So on the Aramir member site, my.aramir.com, if you go there, it'll ask you to log in, but there's free tools, and the one we're going to talk about today is the free vertical spread box calculator. So what does this do? This lets you put in what kind of position you've got and what your target should be. So for instance, in this case, we're using a put credit spread right here for 60 cents. Let's put that in. $5 strike widths. Now, the maximum we can make on this is 60 cents. If this expires worthless, the most we can lose is $4.40. And you saw that on the risk graph. It's a pretty poor reward to risk ratio, but we manage the risk. So let's say for the sake of argument, we want a 15-cent profit, or total profit 15 cents, and the total loss maximum of 50 cents. Or just say 45, 3 to 1. So let's see how that looks. So we want to have the target call credit spread price of 455. So let's see what that is, 455. And now let's look at the risk profile and add these together. And now we've locked in $15 or 15 cents. Say you want to make a bit more, say you want to make 40 cents. Let's set this to 480. So 480. And there's your $40 or 40 cents on one contract. And now your stop, on the other hand, what price do we need to set this at to have a 45-cent loss? And that'd be $3.95. So let's just put that in. And now there's your $45 loss. And here's our calculator again. So typically when we're selling credit spreads, we're going to do double or more. Lately we've been getting hit on our stops a little too early, so we probably want to widen them out. So if we go, say, like instead of 120 to double it, maybe 150, then we want to set our stop to 290, and 290 will give us a $1.50 loss. And that's exactly what we said here. So again, here's the max you can lose, the max you can make. And so it gives you an idea if you're going to try and make more than you possibly can. So if you try and put in like 80 cents, it'll give you a number, but I'll add some code to warn you that this is not possible. So if you just let this go to expiration, the spread price is going to be $5, and we can see that here. If we set this to $5 credit, 5 plus 60 is 560. This is a $5 box. It's going to be worth $5 at the end of the day. So there's your 60-cent profit, and you can see it on the risk graph here too. Now remember, for these types of boxing off things, you don't want to do it on stocks that can be assigned. Do these on cash settled instruments like the indexes. Stocks get into interest rates and assignments, shares of stock and all that kind of stuff. So you don't want to get into that. So just stick to cash settled instruments, but you can use this as a calculator when you're day trading. So let's walk through it again. So let's clear these out. And say you look at the market and you go, well, it looks like it's bullish. I'm going to sell a put spread. So I'm going to sell, let's see, Monday is the 17th. So we'll do this. And we'll go for, say, for about a 15 delta. Now you can get the delta more accurate by just going setup, application settings, display, and decimal places for your Greeks. It defaults to 2. I personally like setting it higher, so then it shows up in my spreadsheets as more accurate. So I can, as I get down to here, like 2.1, I've got a position that expires, and the delta of the short strike's 1.94, for instance. But say we're going to day trade this, and we want to sell a 15 delta, or pick your delta of choice. Here's 1479, so let's go sell that vertical. And so the short strike is the 3505, which is what we selected. Now if we analyze that, there it is. And now let's set our profit targets. So again, we go back to our calculator. Remember, it's on the tools menu. Tools, vertical spread box calculator. Now we set up a put credit spread. So put credit spread, and we're going to collect 65 cents. We're doing a 5 wide, so that's fine. Now the profit target, the most we can make is 65 cents. So most people try and get out with maybe 15, 20 cents total. So let's go with 15 cents. So now we want to set our profit target at 450, and then we want to set a stop here. So let's see how we can set that up. So let's create duplicate order, and now we're going to go one triggers an OCO. So now we're going to do if we do the opposite order, remember this is going to trigger the day trades, which is what we don't want. So we need a call spread with the same strikes, but so if we're long the 05 on the puts, we want to be short on the calls and vice versa. So here we're long the 3500, here we're short the 3500, long the 3505, or short the 3505, long the 3505. So that'll create a box. And then we're doing an OCO, so we want to duplicate this one. Thinkorswim is going to warn us that we can't have 2 orders in an OCO group with the same. So let's set a price. Let's figure out what we want to do again. So if we want 15 cents, we want to set a price of 450. And we can just set these here. So 450. That would give it, that's a 15-cent profit target. We want to use a 50-cent profit target, not $50. 0.5. There we go. So 485 is what you want. And now for the loss, we want to keep that to say $1.50. So 285 for this. And this will be a stop. And there you go. So now when we send this, it'll put this order in, If it gets filled, it'll set our our targets to take a profit target and also to close this. And we're not going to trigger the pattern day trader with this. So this calculator is actually pretty handy. I'll make a few tweaks to it to make sure there's some more error checking and stuff, but this is a first go at it, and it looks pretty good. I think I'm going to use it tomorrow in our day trading. So you're welcome to join us at aramir.com/spx0dte, and we'll see if we can make some money with this and use the calculator to help us trade. Thanks.